The impact on the broader economy and financial markets of the problems in the subprime markets seems likely to be contained. I'd throw dollars out of helicopters if I had to stimulate the economy. The Federal Reserve is not currently forecasting a recession. The amount of currency in circulation is not changing. The money supply is not changing in any significant way. It is not the responsibility of the federal bank, nor would it be appropriate, to protect lenders and investors from the consequences of their decisions. The Federal Reserve will not monetize the debt. Importantly, in the 1930s, in the Great Depression, the Federal Reserve, despite its mandate, was quite passive and, as a result, financial crisis became very severe, lasted essentially from 1929 to 1933. Our mission, as set forth by the Congress, is a critical one: to preserve price stability, to foster maximum sustainable growth in output and employment, and to promote a stable and efficient financial system that serves all Americans well and fairly. Monetary policy cannot do much about long-run growth. All we can try to do is to try to smooth out periods where the economy is depressed because of lack of demand. The economic repercussions of a stock market crash depend less on the severity of the crash itself than on the response of economic policymakers, particularly central bankers. We do not expect significant spillovers from the subprime market to the rest of the economy or to the financial system. September and October of 2008 was the worst financial crisis in global history, including the Great Depression. I and others were mistaken early on in saying that the subprime crisis would be contained. The causal relationship between the housing problem and the broad financial system was very complex and difficult to predict. The risk that the economy has entered a substantial downturn appears to have diminished over the past month or so. The financial crisis appears to be mostly behind us, and the economy seems to have stabilized and is expanding again. The central bank needs to be able to make policy without short-term political concerns. Investment banks manage to go bankrupt through their investment banking activities. Commercial banks manage to go bankrupt through their commercial banking activities. Developments in financial markets can have broad economic effects felt by many outside the markets. Although low inflation is generally good, inflation that is too low can pose risks to the economy, especially when the economy is struggling. Only a strong economy can create higher asset values and sustainably good returns for savers.